Hi, I'm David Scranton, and thank you for watching this video because today we're talking about inflation and how it's affecting your money and how it's affecting the financial markets. Plus, what the Federal Reserve has done to try to slow it down. And always, of course, we'll focus on how it affects your money, whether you're retired or approaching retirement. And now it's time to bring in today's guest, Don Avgerinos, founder and president of Spectrum Financial Group, located just outside of Philadelphia, Pennsylvania. Don, always great to have you back here on the Income Generation.
Thank you, Dave. It's great being here. Thanks for having me on the show today.
So how concerned are your clients these days about inflation?
Wow, they're really concerned. I mean, look at the fuel prices at the pump today. Astronomical. It's unbelievable how high the fuel has gotten in such a short period of time. And it's affecting everybody. Not only is it affecting the regular person, the retiree, but look, all the things that we get at the supermarket, and of course, the price of things in the supermarket also going up. And gas is the reason, transportation costs are going up through the roof, all across the board. And, COVID has a lot of ripple effects that, our supply chains were disrupted during the whole COVID pandemic. And now we're seeing the effects of that. And our clients who are usually on a fixed income are really affected by this. Inflation is one of the worst things for retirees when they are on a fixed income, fixed budget.
Yeah, we kind of had the perfect storm for inflation, the way I see it, really over the last couple of years. And everyone's spoiled because inflation has been really low for a couple of decades now. So I guess my next question is, how bad can it get? What are your thoughts?
Wow, we don't know. See, that's the thing. We have so many uncertainties right now, like the war in Europe. And, we're in summertime now. Pretty soon we're going to be in the winter. Can you imagine what's going to happen to the people that are depending on fuel to warm their houses and to run their economies in Europe? Now, we don't know. That's a big uncertain. And of course, over here domestically, we don't know where fuel prices are going to go. And can still keep going up, then again, it might reverse and hopefully go the other way.
So, it sounds like you're saying we haven't seen the worst yet. We've seen inflation click over 9% just recently in the summer of 2022. So do you think this is the highest rate or near the highest rate we're going to see? And it should gradually get better from here? Or do you think it might tick higher?
We can't predict the future. Inflation has spiked historically. If you think back in the 80s, how high it went, 18, 19%. People were paying that much for mortgages. I don't know if you remember those days, but
I remember. I remember all too well, unfortunately.
Yeah, inflation has the potential to go, sky's the limit. But I do see that, things are starting to settle down. Hopefully, I am optimistic. So I'm going to have to say that I see this continuing and it may go up some more. I see it continuing until next year sometime. I believe we may be out of the woods depending on the war in Europe by this time next year, hopefully.
So it's interesting because, the Fed is using its only tool, really raising interest rates, and it's been called a blunt instrument by many. So now everyone's worried about recession, that the Fed's going to cause a recession. Do you think we'll see recession? Do you think it's avoidable at all or not really?
Well, yes, we could definitely see a recession. I think that it is avoidable. Of course it is. If the economy flips, we start seeing lower gas prices and we see inflation reverse. But, these things cycle through the economy very slowly. It's like a freight train. You can't just put the brakes on. And so our economy is slowing down. We do see more job layoffs than we have previously in the last few years. So that trend is going to continue. I think it'll be a while before these companies begin to switch gears and start hiring again.
Mm-hmm. So what do you tell members of the income generation about the interest rates that are going up right now? Whether they're in cash, whether they're part of the income generation and income generating securities? What do you say?
Well, it's a double-edged sword. So, a lot of people, I spoke to a client yesterday and not a client, it was a prospect. And they told me that they put all their money in cash. And I said, whoa, for every $100,000 that you have in cash, and they're saying that the interest rate for this year, the inflation is going to be about 7.3. And you know what that means? Each $100,000 you have sitting in cash, you're losing about $20 a day in buying power. Think about it. Every morning you get up and have your cup of coffee, might as well take a $20 bill out of your wallet, crumple it up and throw it away in the trash. That's the cost of cash. That's what inflation does. So sitting in cash is not a good idea. On the flip side, if you're investing for income, right now, some of the fixed income assets out there are giving great dividends and interest. Bonds are up. So I don't know why people don't take advantage of that. Just think about it. Today, you're getting more interest and dividends from instruments that give interest and dividends than ever before. So if you're an income investor, you should take advantage of that.
Yeah, bond yields certainly are higher, maybe as much as 2% higher than they were just 6 months ago. And that's certainly a big deal. So bottom line, what do you tell members of the income generation about how to protect themselves from inflation?
Well, there's a few things that you should do. One of the things is try not to spend too much, right? So if things are expensive right now, just hold off on making big purchases. Watch your budget, control your expenses. If you have any debt, try to pay it off. Try to get rid of those high interest loans if you have any, of course. Those are the kind of things that you want to do. And try to invest in things that give you dividends. A lot of companies like stocks that give dividends give you a good opportunity because they can pass through that inflation and still give you a nice return. So I believe when you invest for income, it's like having a chicken that lays the egg. And we were taught when we were younger, through fairy tales, the goose that lays the golden egg. They don't teach us money in school. But back when we were kids, I remember my grandma told me a couple stories and they referenced the goose that lays the golden egg. So when I explain the income model to my clients or to my prospects, they get it. They go, aha, I get it.
I know you're right. People don't, sadly, learn about this stuff in school. But I know people in the Philadelphia area can certainly learn about this stuff from you. Thank you very much, Don Avgerinos, Spectrum Financial Group. Great having you back.
Thanks, Dave. See you next time.
And if you enjoyed this interview and learned a lot from Don, go ahead and click the thumbs up button to give us a like. And be sure to watch more videos on our YouTube channel each and every week. Thank you.